The semiconductor space has seen all sorts of growth in the past year, past couple of years. Obviously, NVIDIA gets all the headlines. We're looking here at stockanalysis.com stock screener. I do want to point out I'm not too terribly thrilled with the fact that these don't all start at zero, but I think what's happening here is that the data actually starts one day before, and we're just seeing like the next day's growth. But at any rate, we have the 1 month growth here. We see that we have the various growth rates of these different companies. Broadcom is the winner over the past month at about 18%, with MU coming in at about 11%. MU is something that we have in our portfolio at Interflame Finance and Investing. If we go out to 3 months, we can see that Micron is the winner, fortunately for us as holders of that company. NVIDIA is last in the past 3 months. 3 months. It's getting all the headlines, but it's only up about 7.64% in the past 3 months. AMD has really caught up in that space in the past 3 months. 6 months, MU is the winner. AMD second place, Broadcom, NVIDIA, and Qualcomm dead last. We go to year to date, and we can see phenomenal performance from MU with about 214% gains over the past almost year. We're at the year's end here on December 10th. And we can see the performance of the others, and Qualcomm not doing so great at 21%. Now, don't get me wrong, 21% in about 11 and a half months is fantastic. But when you compare it to MU's 214%, it's just not there. Now, the past year, we could go 3 years, and then obviously you can see why we like this space so much. And we are getting interesting scatter on this plot here. So maybe we'll try to reset it. There we go. Stock screeners seem to like to put random points on there. Now we're here at the 10-year mark, and you can see why NVIDIA is everybody's darling in the stock market. If you've had NVIDIA for the past 10 years and held on to it, you are up 23,000% on your investment. Okay. Qualcomm in that time, in 10 years, is up 397%. So we're not too terribly concerned where we've been. We want to know, where are we going? Where are these stocks going? What's a buy? What's a hold? Maybe what's even a sell? Now we have ranked and scored each and every one of these companies. We can see in the growth categories that NVIDIA is the winner in the future. What we expect NVIDIA to do, remember these scores go from -10 to +10. NVIDIA is coming in at an 8.5, and you can see why. If we look here, every single one of these metrics is bolded except for their forward PE, but their forward PE at a 25.3 is not too terrible. But we can see the 5-year forward PE at 8.3, absolutely fantastic. In order to get that, we have to get about 41% growth for the next 5 years. Can NVIDIA do it? We'll find out. Now, AMD is coming dead last. And again, these numbers, the scoring system that we use on this channel goes from -10 to +10. And so 3.5 is not in the middle, it's a little bit better than the middle. But you can see that there's not as many metrics that are jumping out for AMD. The one that really gets people's attention is their expected EPS growth at over 58%. Now that's over the next 5 years, that's annualized. And so if they can execute on that, if AMD can really start to take away some of NVIDIA's market share, they can certainly do that, but we're going to be a little bit more conservative and optimistic on this channel. But if they can do it, and you buy AMD today, in 5 years, you're essentially buying it at an 11 PE, which is phenomenal. The recent years have given the technology sector a PE of somewhere around 30 to 35, maybe even 40. So getting something for an 11 PE in 5 years would be phenomenal. Now, obviously, these are all growth plays, but we're also going to look at their safety scores. Looking at the safety scores of these companies, we see that Qualcomm does come in first at a 7.9 out of 10. Now, the reason why predominantly is because they are the only ones that offer anything over 1% dividend yield. They've been growing their dividends for 22 years. Not too phenomenal dividend growth at 5.1%. Payout ratio is getting a little up there at about 70%. But NVIDIA does offer somewhat of a dividend, and I think their growth helps prop them up as kind of sort of safety plays. I mean, they are a gigantic company. Now, AMD does come in at -1.4. You don't want to see that, but they do have no debt to equity. And so that jumps out at us as well. they have very little debt. Maybe if we even add a decimal place to this, we can see that it's at a 0.1, which is essentially zero. But all these companies, debt to equity ratios, very small. We like to see that. Okay. And I do want to point out again that the PE ratio is 110. That gives us pause. However, if they can execute on that growth, you are buying AMD right now. In 5 years, you are getting that at a 5-year forward PE of 11, which is absolutely phenomenal and fantastic. Okay, so these are not safety companies by any means, but what we are going to do is score Qualcomm and Broadcom. We're gonna do intrinsic value calculations for all these companies of the PE ratio, projected ratios, and projected earnings per shares. Scale it back with a discount rate. But also Qualcomm and Broadcom are going to use the dividend discount model because they offer kind of sort of decent dividends at 2% and 0.6% respectively. Now I'm actually using the intrinsic value calculators that we made on this channel recently. I will go ahead and put the links to those videos in the description to this video. But this is the PE ratio, the multiples projection, where we take their projected EPS, earnings per share for the next 10 years. We approximate their terminal value. We scale it back to today's dollars using a discount rate. And we try to see, well, what is this company actually worth if they grow at various rates? And so Qualcomm, for example, we expect it to grow at a reasonable 28% for the next 5 years. If you recall, what we do on this channel is for years 6 through 10, we take that 28% and we're going to scale it down by half to be on the safe side. I mean, 28% growth for the next 10 years is a little too optimistic for us. So we're going to cut that in half in the last 5 years. And we're also going to do a dividend discount model. This is a video that we made on this channel that I showed you how to build your own dividend discount model intrinsic value calculator. So link to that video in the description of this video. But what we're going to do is we're going to look at all these companies and we're going to say, if we had $100, how would we invest in these companies? So what I have here is each company's score for growth, their score for safety, and I average those two scores. And remember, we like 5 and above. I am putting Broadcom in here mainly because why not, right? It does have a slight margin of safety of 5.5%. We typically like to see margins of safety 20% or above, but we're going to keep Broadcom in here just for funsies, okay? The one that we are excluding is Micron. Remember, in the past year or so, Micron has just exploded. It's past every other company on this list. It's maybe too overvalued. Maybe it's gone up too fast, too quickly. And so we are going to hold off on buying any Micron. And again, nothing on this channel is investment advice. I'm not telling you to buy anything. I'm not telling you to sell anything. I'm just showing you this for educational and entertainment purposes only. But we do have the 5 intrinsic values of these companies. 2 of them, Qualcomm and Broadcom, are using both the PE ratio multiples model and the dividend discount model, and the other 3 are just using the PE ratio model that I showed you before. Here's their current price, and we can see their margins of safety. And 3 of them have very healthy margins of safety. Qualcomm, NVIDIA, and AMD are all coming in well above our 20% threshold. And so if I had $100 to invest today and I had to invest in these 5 companies, I would put nothing into Micron, although that is a phenomenal company. It's gone up too much too fast. Qualcomm would get $36, NVIDIA would get $50, AMD would get $11, and Broadcom would get $3. Again, these numbers can be scaled. If you had $1,000 to invest, we put $1,000 there. 358 into Qualcomm, 504 into NVIDIA, 108 into AMD, and $30 into Broadcom. So thanks for watching. Like and subscribe. Tell your friends all about this. We're just going to keep going through different techniques of investing, the philosophy of investing, how to invest, how to manage, how to save your money. And like in these videos, we're also going to look at particular sectors and industries and evaluate them and see if there's any gems on the horizon. So thanks for watching. We'll see you next time.